Oops.
John, while you're getting that set up, I'm going to go ahead and welcome our attendees here. Welcome, everyone. My name is April Smith. I'm the Education Coordinator at NAFA. Welcome to the Sustainable Fleet Technologies webinar. Before I turn things over to our presenters for today's session, just a few housekeeping notes to review. This session is being recorded. A copy of that recording will be provided to you in the coming days. All participants are muted during the presentation to limit background noise, but we do encourage you to ask questions and add comments using the chat and Q&A features. You can find these in the Zoom toolbar. If you experience any technical difficulties, please reach out to the NAFA team through the chat feature. And now to kick things off, it's my pleasure to turn things over to John Bonnets. And John, I think you'll want to flip your screen because we're seeing your presenter screen.
Presenter mode, okay.
If you go to the top, it says swap displays.
Thank you, April.
Oh, wow.
Very good.
There you go.
All right, yes. Hello, everyone. Thanks so much for attending the webinar. My name is John Bonnets. I'm a Clean Transportation Project Manager with the North Carolina Clean Energy Technology Center. I'm joined with today by my colleague Alric Lunsford, who is a Clean Transportation Specialist on our team. And he is also the director of the Piedmont and Coastal North Carolina Clean Communities Coalition, the newest Clean Communities Coalition in the Southeast region. And I especially am grateful today for the presence of Jeremiah Leroy from Buncombe County, and Nestor Perez and Jillian Blanchard from the Lawyers for Good Government. This is a very exciting webinar session today that we've pulled together with their assistants to really dive into the tax credits for clean vehicles and for clean fueling infrastructure that are available under the IRA, and this is still in law. This is the direct pay, or as it's called formally, the elective pay opportunity for nonprofit organizations, local governments, and other tax-exempt entities. I am also very pleased that we're doing this in collaboration with NAFA, the North American Fleet Administrators Organization, who help us with promotions and some back-end work. Thank you, April Smith. Let me advance the slide. We would not be able to do this work without the sponsorship support of the United Soybean Board, Lake Services, Geotab, and Pioneer eMobility with the eBoost mobile EV charging platform. And we're grateful for their support in our education and outreach work. Just to give you a lay of the land today, we're going to start with introductions, and the presentation, the meat of the presentation, will begin with Jeremiah Leroy from Buncombe County, speaking about their direct experience in tapping these funds. Next, Nestor and Jillian will present the details and instructions on how entities can avail themselves of the abundant helpful tools and information on their website. I'd like to ask everyone to hold your questions until the end. We will address questions as they come through if they are readily answered in writing, but you can expect to have those stack up, and please do write them down so you don't forget them. And then finally, we'll close with some details about additional technical assistance that the Clean Tech Center is offering, and some events that we very much want you to know about. So I'm going to hand the floor over to Jeremiah Leroy.
Thank you, John. It's a pleasure to be here. I appreciate being asked to come and speak about our experience with elective pay. There is, frankly, I was telling Jillian before this, I looked at the calendar invite and I saw clean vehicle credit and I thought, is that the wrong one? Because I didn't do that. And it's because we pretty much were working exclusively on renewable energy projects here in Buncombe County. But it's important to know that this process is essentially the same, whether you're going for a solar credit, an EV tax credit, whatever it is. It's essentially the same for us. So Buncombe County is, I like to believe, and I think most of the folks that I work with in the Southeast would agree that we're a pretty big leader in this space in terms of deployed renewable energy for local governments. So I'm here, if you'll go ahead and just start the slide presentation, because we did a boatload of solar projects, and I mean a boatload of solar projects. So back in 2020, we decided that if we had never done a single solar project on any facility that we owned, and instead of dipping our toes, we decided to just jump headfirst into the pool and do 47 solar projects simultaneously on public facilities all over the county. That is now up to over 60 commercial solar projects all over the county. And that does include a 5 megawatt solar farm on our retired landfill that actually just went active about 2 weeks ago. It has been a 5-year-long project, and boy, when they called me and told me it was finally operational, it was really one of the better days I've had at work in quite a while. So I'm going to be talking mostly about the solar projects we did today and what that process was like for us, and then what elective pay really did to sort of help enhance the investments that we made, which is really what I think this is all about. So next slide, please. Why did we do this? So we did this, we want to say because it was the right thing to do, but the truth is that in Buncombe County and in North Carolina, and I don't know how many of the folks on this webinar are in local government, but in North Carolina, counties fund schools. And so every year we have our school systems, and in Buncombe County, I think we're one of the only ones that have 2 school systems within the county. Our schools and our community college are all funded through us. They come to us every year with their budgets, and we essentially pay for the vast majority of everything except teacher salaries. So we hold their debt, we manage their construction, we pay their bills. So we've got 40 county schools, another 13 city schools. We've got several community college buildings, and we had a pretty vested interest in ensuring that, because we're paying the electric bill on these facilities, that they're efficient, they're effective, we can make savings where we can. And so we undertook the process of looking at all of these facilities and determining which ones were the right fit for potential renewable energy installations. It was a long process, and it happened during COVID, so that was super fun. And so instead of being able to sort of like go out and do site visits and work with contractors and bring everybody along, I ended up mostly doing like drone footage of the rooftops, and I learned how to fly a drone. It was pretty awesome. And the stuff we had to go through to get the footage we need to be able to put packages together to bid these projects out was kind of insane, but it was super fun, kind of a neat learning experience. And everybody else was at home anyway, so what else was I doing? It was time to figure out how to work creative. So that was one of the reasons we decided to go big. We thought aggregated procurement would be the way to go. We could potentially actually save money by sort of, I guess, bulk purchasing, if you think about it that way. The other piece of it was that Duke Energy had a solar rebate program at the time, and a bucket of that solar rebate money was for nonprofits or non-taxpaying entities as well, and it was completely unused essentially. And so I decided, if we're going to go for it, we should just go for it and apply for all of these solar rebates, and that ended up working out to our advantage as well. So we got together, did all of these, bid out a package of 47 total projects for the county schools, the city schools, AB Tech, our community college, as well as county facilities, and we got the city of Asheville to partner with us as well. So it ended up being quite a lengthy process to get those projects out to bid. And if we'll go to the next slide, we'll talk about the math a little bit. So total project costs was about 10.2 million. That doesn't include the city of Asheville. We didn't pay for their stuff. They're on their own. City can do their own thing. But the county funded 2 school districts, our community college, and our projects. And we did that with a debt issuance. We financed that at 15 years. Do you guys remember back in the 2020-ish time when 2% interest was actually normal? That's what we got on the general obligation bond that we issued. I tell people that we got 2% and that just blows their mind because we're so far away from those interest rates now. But our Duke Solar rebates were, if we were to receive all of them, would potentially be up to a little over $2 million, almost $2.5 million. And that would essentially, in the way I kind of pitched this to my board of commission at the time when I was trying to sell them on these projects, was if we get these rebates, it's kind of like getting a 0 interest loan. You know, like we can debt finance these, but we're not going to have to pay interest because we're getting enough money back on these rebates to actually cover the cost of that debt issuance. And next slide, that's essentially kind of what we did. So in working the math, we were able to figure out we'd have, if we were to get the rebates, about 17 million total in savings over the lifetime of these projects. Solar lasts for a long time. We're talking about 30 years. And even if we didn't, it was almost a $15 million savings for the county. So it felt like a no-brainer. At the time, our board was very split. I think we have a very environmentally passionate board today, but 5 years ago, it was a different, a different elected body. And the fact that we were able to get all 7 of our commissioners to vote for this was actually a pretty big deal. And so working through this process, selling them on the idea that we get these cost savings was very exciting. We got it done. We're able to start projects, get boots on the ground. And then, next slide, please. Then comes along this kind of amazing thing that nobody saw coming. I certainly didn't see coming. The Inflation Reduction Act. So this was kind of a game changer. We already felt like these projects were cost effective. We felt like we were able to sell our community, our elected body, on the idea that like these projects are good, they're going to pay for themselves. Obviously, there's a clean energy benefit to it. Lots of reasons, win, win, win. And then I start reading, oh, local governments available tax credits. The math didn't even work in my head. Like, we don't pay taxes. Why would we get a tax credit? That doesn't make any sense. I'll take it. but it didn't make any sense. It was just a really exciting opportunity for us. So the truth is that we don't have tax experts. We don't pay taxes. We don't have anyone in-house that knows how to do this stuff. So while it was exciting, it was also pretty intimidating, honestly. Because no one in-house had any expertise in doing any of this stuff. So, we reach out to our partners, we talk to our different networks. We're trying to learn as much as we can from our peers who are kind of going through the same thing. If you go to the next slide, please. And then come the heroes, right? This is where the heroes enter the story. And Jillian and Nestor will talk a little bit about what they do in a few minutes. But the truth is that they show up at our doorstep and have so many resources for us. This cohort, of course, I think we had to go through an application process to get into the cohort. So I felt very confident in going, I got 70 solar projects. They're going to want me in this cohort. I figured we'd be a pretty good test case for them to say like, wow, they got a lot of projects and there's potentially a lot of money on the table. Like, let's let them in. And they did. So my confidence was well founded in that particular instance. It isn't always. But of course, the Lighthouse cohort it's a group. It's not just Lawyers for Good Government, GFOA and WRI and some others. Really just pooling resources to get experts at the table to sort of help folks like me, especially again, because I'm the sustainability director of Buncombe County is a department of 2. I got 1 person and I wasn't getting any internal help, right? Like, because again, no one knew how to go through this process. And so for the Lighthouse cohort to, take us in and give us all the resources we needed to kind of figure this process out. What do these tax forms look like? What's required of us? How do we fill them out? What qualifies, what doesn't qualify? Understanding if it was funded through a bond like ours was, like there's a haircut you have to take and here's how you can do that, right? Giving us the forms, and I think we had a bunch of annotated documentation that they had provided for us. It was a godsend. And then you couple that with getting all of the forms done, just literally a giant stack of tax documents. Never been so bored in my life reading through tax documents. But I was really worried too at the end of the day, I was gonna have to put them in an envelope and take it to the post office and send it to the IRS. Snail mail, because as much as we tried, we could not find a place to e-file, even though the IRS really wanted you to. They're like, everyone should e-file, but there was no way to do it. They actually ended up hooking us up also with a financial company that was able to help us with the filing, the actual electronic filing of it too, at a very reasonable price for us. And it was a really, really beneficial process for us from start to finish. So I can't say enough about the work that they did to help us be ready for it, and to take advantage of it. And frankly, we have, we've been very fortunate. We've gotten quite a few dollars that have come back to us, and we expect to get quite a bit more. So thank you, Lighthouse. I haven't actually maybe said that to your face, but I see you now. And I want to say that very loud and clear. We really, really appreciate all the support you guys gave us. It was, I saw a heart fly up. That was cute. Yeah, really appreciate it. The support was immense, and I don't know that we could have done it without you. And if we could have done it without you, boy, would it have taken a lot longer. So thank you very much. So what did that mean for us? Next slide, please. Well, it changed the math, basically. We went from, well, this could pay for itself in 14 years to, well, maybe it's going to pay for itself in up to 11 years if we get these rebates. And now that $10 million is more like 8.5 years that it's going to pay for itself. That's a massive jump for us. These solar projects were the right thing to do. They were cost effective without it. But looking back, I mean, it's a no-brainer. It's silly not to take advantage of this. Of the projects, and I will say, because some of these projects happen sort of pre-IRA, it's taken, as you can imagine, with 60 projects staggered out over several years. Some of them were not eligible because they went online before the IRA was enacted, but several of them were, many of them still are for this tax year we're going to be filing for soon. But we're looking at like $1.8 million in elective pay. We filed for 1.2 in 2023. We've received 350,000 of it so far, and we're expecting about another 800,000. Crossing my fingers, and I say any day now those remaining checks will come in, and we've got about another 500,000 or so that will actually, we're filing any minute now. We're ready to send those out. Those documents are all completed and ready to be filed. So, I mean, that jump from paying for itself in 14 years to paying for it in 8.5 years, I don't know what, I feel like that kind of sells itself, and I don't need to explain that anymore. It's a pretty big jump for us. So I think the other thing here that's key, and if you'll jump to the next slide, and this will be kind of it for me, is that, like, again, I want to stress that this is about clean vehicles. And so these tax credits are available on a plethora of other things. So in our next filing that we're going to be sending out in the next couple of days, we do finally have like the purchase of electric vehicles in that filing. We have installation of electric vehicle charging stations in that. And in fact, we're piloting our first two, because we've done so much solar, we're piloting our first two battery storage projects. And we're gonna be filing for those as well. So again, in that $500,000, we've got lots of different technologies that we're implementing here in Buncombe County that we're very excited about. And again, all of them become so much more cost effective if we're able to take advantage of these tax credits. So that's kind of it for me. That's where we've landed. I don't know how much time I took. Hopefully it was on par with what people expected. And I look forward to answering folks' questions and being around till the end to have a great discussion with all the folks that are here today. So thank you for your time.
Thank you so much, Jeremiah. And now I'll turn the floor over to Nestor and Jillian.
Thank you so much, John, and thank you, Jeremiah. That is so nice to hear. I think Jeremiah is being far too humble because he did the lion's share of this work, and without him, none of this would have been possible for Buncombe County. So thank you, Jeremiah, for everything that you've done to make it save your county a bunch of money. So hello, everyone. Thank you very much for having us here at Lawyers for Good Government. I'm Jillian Blanchard. I'm the Vice President of our Climate Change and Environmental Justice Group. I'm also an energy and regulatory attorney who I like to joke has been playing a tax attorney for the past few years in light of the incredible tool that elective pay has brought to all of you under the Inflation Reduction Act. And so I'm going to just do a quick introduction, and then Nestor is going to provide an overview of elective pay or direct pay. You're going to hear us use those two terms interchangeably. We try and make it easier on folks by saying direct pay usually, because that's what happens. You get a direct payment. As Jeremiah, the reason why is because of what Jeremiah was saying. You don't pay taxes. The reality is the private industry has been able to benefit from these tax credits for decades. They've been around. They're not, crazy and wild and new. Most of them have been around for a very long time, and private industry has been taking advantage of them. The thing that's really exciting is that the Inflation Reduction Act said, well, wait a minute, everybody should be able to take advantage of these because private industry gets it. Why can't a city that does the same thing? And so they essentially just said, you don't have to have a tax liability to be able to take advantage of these same tax credits that the private entities have been taking advantage of. And that's why when you file the right tax forms, even if you have no tax liability, you just get paid in a direct payment. So in the regulations, in the statute, it's elective pay, but we also like to say direct pay because that's how it comes to you. Okay, next slide. No, John already told you who we are, but I've worked for far too long. So you get my picture is small, so you probably can't see all the gray hairs, but they're there. Nestor Perez has been working a lot right alongside with me, doing incredible work in this space, helping not just Jeremiah, not just the Lighthouse cohort group of 60 cities all told, but so many other cities who just come to our resources outside of the Lighthouse and can take advantage of the same resources that Jeremiah was able to take advantage of in Buncombe County. So through this process at Lawyers for Good Government, we have about 125,000 legal advocates in all 50 states. And we use this kind of army of attorneys to help explain some of these really complicated programs that are out there for you, to make it easier for you to take advantage of them, because they're really powerful. But if people don't know what they are or how to use them, they're not so powerful. So through that process, I've been able to kind of manage a bunch of those pro bono attorneys along with our incredible in-house experts. And Nestor has been working with communities on environmental justice and energy for a very long time as well. And he's published on these issues, and as well, he's been working with me directly, assisting local governments, nonprofits, universities, school districts with elective pay since it was just a sparkle in the Build Back Better plan before the Inflation Reduction Act became a law. So we're all very excited to kind of tell you more about it. Next slide. All right, so this is what we're going to go through. We're going to give you the overview. Just confuse you just enough to say, wait a minute, Jeremiah made that sound really good. These guys are making it sound confusing. What do I need to know? And then we're going to come back with all the resources you need to actually file the taxes and do what you need. to do when you get in there. Now, we know a lot of folks are concerned, like things are changing, the landscape is changing. We want to address that too. We want to talk about kind of what the state of play is, and the good news, too long, don't read. It's good news. It's written into the law. So we feel pretty good and pretty strong about direct pay. And then, of course, we never leave you empty-handed. We want to go through our resources so that, you know, even if you remember nothing else from this presentation, you go to our Clean Energy Tax Navigator and you get all the resources right there that we're telling you about today. And then, of course, we want to share in the Q&A and make sure you get your questions answered. Next slide. Okay. I always have to say this, we are attorneys. We are not your attorneys. So this presentation is not legal advice. It is high level, informational, and that's how it's meant to be used. Of course, you'll hear us talk at the end. You should always, you could ask Jeremiah this too, always go to your attorneys, always go to your finance folks. Do that as soon as you can. We know that's difficult for some folks to do. People don't love their attorneys. I can't even imagine why, but it's a really important process, is to get them in the room and thinking about these things with you and familiar with this process. Okay. With that, I'm going to turn it over to you, Nestor, to give the folks an overview.
Thank you, Jillian. So today I'll be covering the very basics of direct pay, just to make sure that the most significant items in the process are in your mind and that you know where to find the resources once you're going through those stages. So happy to go into the next slide and dig right in. So in terms of direct pay, as Jeremiah was mentioning, it is available to tax-exempt entities, and we'll cover a little bit deeper what that means. But broadly speaking, that is local governments, other entities of the state, states themselves, nonprofits, houses of worship. The most important part of it that is often overlooked is that it's uncapped. So it's unlike other sources of grant funding where there's a competition and the first 17 applicants get it and 18, 19 below are cut out. That's not the case here. So in here, if you're eligible and you submit the paperwork properly, you will get your funding. It's also available for 10 years after the signature of the IRA into law. And it covers a wide array of technologies like the ones Jeremiah was mentioning, and important to this group, EVs, EV charging infrastructure as well. So the ability to stack the credit with bonus adders is also a significant portion that is often overlooked by entities, and that is to say a lot of the tax credits themselves have the ability to be joined together with bonus adders that can potentially bump up the reimbursement to up to 70% of the total cost. So that is a significant point to keep in mind. And so we'll go to the next slide. And this is, broadly speaking, a type of combination of funding that entities have done out there and that we have seen already work out for some. In some cases, they are combining grant funding with the tax credits and other sources of financing. So as we go on, you will see different sources of funding that can be combined. And unless some rules like the ones that Jeremiah was mentioning regarding muni bond financing or excess benefits, broadly speaking, the funding is scheduled to come back to the entity in the form that it's applied for in the tax credit. So if we go to the next slide, you will see the fuller list of parties that are eligible for direct pay. And amongst the lists, significant to this group are, of course, the local governments, municipal-owned utilities, and rural electric co-ops. But the one item that I'd really like to draw your attention to is that to be eligible for the reimbursement through direct pay, the entity itself must own the asset. That is the key threshold question. And that is to say that the entity built it, the entity owned it, then the entity gets to claim the funding through the tax credit rebate. Parties that are excluded from direct pay, important to note, partnerships, but that is to say partnerships for tax purposes. So if your entity is a partnership under the tax code, then it's currently excluded from direct pay. There is other types of joint ownership that it may be available to claim direct pay, but just to mention that really the entity itself must own the asset. That is the broad takeaway from this slide. And we go to the next one. And so these are some of the things to keep in mind, as I was mentioned, the ownership, the no partnership, and the no excess benefit rule, which I was alluding to earlier. Essentially, it just means that if you're stacking the tax credit, as we like to say, stacking just means that you're using the tax credit with a project that also used a grant, then if that grant was a restricted grant, then the entity cannot make more than what the project cost. And so essentially, a reduction of the tax credit would happen at that point if the grant is restricted, so that you can only claim the part of it that actually came out of your pocket. But if the grant on the flip side is unrestricted, then you can get the full tax credit amount back. And so that's an important question that we'll have resources here right at the end of the slides, and you'll get these as well in an email. So essentially analyzing whether that grant was restricted or unrestricted would be an important question. But broadly speaking, restricted just means that the grant says you have to put in place this type of project, or you have to put in place this type of car, this type of solar panel, but nothing else. Whereas unrestricted funding, think of ARPA funding, where it's for broad use and it's your money regardless. So that is at broad strokes what the grant language means here. And so we go to the next slide. You'll see all the tax exemptives that are eligible for direct pay for different types of projects. But most important to this group, I think in the next slide, you will see the most common project types and tax credits that are available for them. So the 45W really is the qualified commercial vehicles credit that is really important here for you all. And it would cover EV fleet transitions that, as we see it, they have to take place anyway. And so why not have the government take a piece of the cost and get the money that you are entitled to under the law if you put them into service as an EV fleet. Others that we have seen, of course, school buses, public transit, police cars, all kinds. And so the stacking is also available with other types of funding for this credit type. And then the other three project types that we see also for the tax credits are the charging infrastructure, and that is available under 30C. And of course, it's only when it's placed in non-urban or low-income areas. And there is a useful map where you can see what areas of your entity could be covered, and we'll flag that in the resources as well. And the 48, section 48 on the right, and section 45, those are primarily for energy generating assets and battery storage, like Jeremiah was mentioning as well. So we have your solar, your wind, your geothermal, but primarily what we see implemented at the local scale is the one on the bottom right, which is the ITC, investment tax credit. And that is because you get a lump sum payment as calculated upon the cost basis of what it costs you to put that into service, whereas the one at the top, 45V, is really more for large utility scale projects, typically as they pencil out better on that side if you're using that level of scale. So when we go to the next slide, you'll see the adders that I was describing that could be stacked upon the basic credit. And I'm not going to spend too much time on this because it could be very tricky and very fact intensive depending on the project types that you're using. But I do want to flag that our resources explaining them in detail are hyperlinked there, where you see fact sheets. And that's everything that we've learned by assisting entities like Buncombe County and others. And we've put those things that we've learned, that we've researched with our in-house and pro bono attorneys into those fact sheets so that entities can see it in a self-help way. And the main ones here, the domestic content bonus, it is something that if you meet it, it could increase the credit by up to 10%. And the prevailing wage and apprenticeship as well. And it is something that when it's required, it could reduce your credit. So you have to be mindful of when it's actually required versus when it isn't, and it actually could become a bonus. The energy communities, we have a mapper there that can show you where the DOE allocates those, and those primarily are formerly fossil fuel driven communities. Think of like coal mining areas, but also landfills, and that is to say like brownfields rather. So brownfields for the purposes of the IRS that are places that where you have energy projects put into service like solar and wind, you could also get a 10% bump. And the low income community bonus that can add between 10 to 20%. And it also applies primarily for solar and wind projects that are under 5 megawatts. So I'll go to the next slide. And so here, I'll just describe briefly the top lines of how you go about that process that Jeremiah and Buncombe County and others have gone through to actually claim the funding that you're owed once you've put this project into service. And so we'll go to the next slide to cover the basic steps. So under the first step is to determine what filing timeline you have, because as new entities coming to tax filing, you will have to make a determination of what your tax year is. It's often driven really by your fiscal year that you're already using. But there may be some unique situations where you want to look at that closer, and we have guidance on that, on how to do that. And so under step 2, you go to the IRS portal, and you make what's called a pre-filing, which is essentially a way for you to flag to the IRS, these are the projects that I intend on filing with my tax filing. They will review, make a very preliminary assessment of potential eligibility for the credits, and then give you what are called pre-filing registration numbers for each EV has its own, each energy property gets its own, and then that number you use at your actual filing, which comes down the road. And after that, you get to step 3, which is actually doing the filing. And the baseline form there would be your 990T, which would then be accompanied with the 3800 and in all cases. But then the other forms that you see there, the last 3 forms, depending on the type of project, you would use one of those. And in the case of EVs, that is form 8936, plus a Schedule A form, which is done for each vehicle. Don't worry, we have resources that, like Jeremiah was mentioning, we have a lot of annotated forms that can help you walking through these and filling them out, collecting the information that's going to be necessary. But finally, if everything goes well and you have done the filing correctly, use the resources or other that's out there, you will get the reimbursement in step 4. And so currently, we're seeing reimbursements continue to be issued even after January 20th. So the program is still processing, chugging along as expected. There have been some delays related to the types of filing processes that were made available for entities that wanted to do it in paper, and so that those have generated a bit of a backlog. But regardless, this program is chugging along, and we see the payments continue to be made, even with interest in cases where it's owed by the IRS. So we have lots of resources to help you. And so we'll go to the next slide so that I can just emphasize that when you're doing these pre-filing registrations and the tax filing themselves, it's very important to just have a backup of very important documents that you're going to need, like the permission to operate in cases of where you're plugging in like a solar array from the utility, or invoices, receipts for the vehicles. In cases of vehicles, also it's useful if you've made any necessary adjustments to the vehicles to be able to put them into service so that you can track those changes that you make to the vehicle. Sometimes that it could be a threshold issue really for you to be able to determine when the vehicle was actually put into service. And it's just very important for you to keep evidence that the property was used for its intended purpose. And just remember to try to put yourselves in the shoes of the IRS here. The person that's reading your pre-filing, they're not familiar with your project the way you are. And something that may be obvious to you, it may not be as obvious to them. And so in order to make a smooth process for you, it's in your best interest to have the right documentation. And that's what our resources are meant to help you with, compiling and submitting those in an easy to understand way. So I'll go to the next slide and pass it to Jillian to cover the current state of direct pay.
Excellent. Thank you, Nestor. And there've been some great questions in the chat that I've kind of put some answers in there, and I'm hoping, John, we can capture live for folks if they're not able to see them in the Q&A. I've also put in some of the links in the chat, so I hope others can see that. I'm going to be showcasing my tech failures if you can't see it, but I did try, and I think it's in there for everybody, but if not, we'll share in the Q&A. Okay. Next slide. We're going to talk about, in this changing landscape, what you need to know about direct pay. The good news is this is written into the tax law. There is no executive order that can change these tax credits. They're written into law. The only way these tax credits could be amended or changed is if Congress actually passes a law and agrees on exactly what it would be to repeal these. That has not happened, nor is it even in draft form yet. So these credits, for example, if you're learning about federal funding freezes or you're hearing things about that, these credits are not affected by those funding freezes because the credits are not discretionary. They come in a totally different bucket of money, the way that the federal government doles them out. It'd be as if you filed your tax return and you were offered a refund and you didn't receive your refund. That's not going to happen. So it's the same kind of thing. It is a kind of guaranteed return. In fact, they actually have to pay you. I was just telling Jeremiah, if they don't pay you within 45 days of your latest deadline, then they actually have to start paying you interest on what they owe you for those tax credits, because you are entitled to them. If you follow the rules and file your forms correctly, you are entitled and you've completed your projects. And then we'll notify you if there are issues with your return. So if you had an issue with your return, there's a mistake or something else, they will notify you. That pre-registration process that Nestor talked about is one of the ways that they go through letting people know this project that you're going to be potentially putting on your tax forms is not eligible. Don't put it on there. We can't give you a project, a pre-registration ID number for that project because it's not eligible. So we've actually had cities we were working with who thought maybe a hybrid was eligible, and they plugged in the VIN and they put in their ownership and the pre-registration, and boop, got spit back saying, no, these projects are not eligible because it's a hybrid. It's not fully electric, or whatever the reason might have been. So that's a really good fail safe for you, because you have to do that process anyway to know that when you get that unique ID number, your project is likely eligible. The great news is you don't file until your project is done. So anything and everything that was done in 2024, you are probably filing for now. Different deadlines come up, as Nestor was saying, based on your taxable year. And we could talk in the Q&A about when your first filing deadline might be if you think you have some eligible projects. Very happy to work through that, because if we work through it with one of you on this call, others might probably benefit from hearing that. So if you have a 2024 project that might be eligible, think about what your filing process looks like now, because you might be coming up on your first filing deadline. Those projects will not be impacted. It looks like there's a little bit of a typo on the slide, but we feel fairly strongly that what it's supposed to say there is 2025 projects will likely be safe. And that's because even if, in the very unlikely scenario that this Congress got its head together in the next 24 hours to kind of come up with a new, that's not been drafted yet, a new resolution to get rid of all of the tax credits, that even that, which we don't expect at all would be even remotely possible, even that wouldn't likely go into effect until January 1, 2026, because they don't like to implement or changes to the tax code in the middle of a tax year. It causes all kinds of problems for the IRS, for the public, for everyone. So we really feel pretty strongly that 2025 projects will be safe as well. Of course, we have our disclaimer, we don't have a crystal ball. There's a lot of things that are changing in ways that we didn't expect, but even taking those changes into account, we still feel very strongly that the 2025 projects would be safe, which means you could be filing all the way up into 2026 for those 2025 projects. Next slide. Okay, so the other thing I'll just say that I think is, we'll go into it in a minute. And what do we expect for the future? But first, I want to say for anybody who has filed, and I know Jeremiah is waiting for a couple of the projects to receive checks back. What happened here is a lot of the paper filings, for the very first time, the IRS was accepting these filings from different groups, and they allowed people to paper file, even though, as was mentioned, they really wanted people to electronically file, but that was hard to find the right people. And so they were allowed in this first year of filing to do paper filings. Please note that may not be allowed for you going forward. So don't assume that you can paper file. Good news, we have people who can e-file for you. But at least for now, what's happened is they have a lot of paper filings that they got, and they have to actually manually transcribe them. I was talking to someone at Treasury and put them into an electronic filing for you. And it's created this massive backlog that they did not anticipate. And so it's just taking them longer to get their check to you. They actually have a desire to get it to you as quickly as possible so that they don't have to pay interest on any late payments that they owe you. So it's in their best interest, as well as yours, to obviously get it back to you as quickly as you can. There are ways you can go about checking on the status of your filing. They are like anyone trying to call a credit card company or the IRS. You can expect to be on hold for a very long time, possibly with annoying hold music, but you can get through to people if you're willing to kind of stay the course. You can also email this very long and non-efficient email address to try and check on the status of that form. And again, this is just if you filed a tax forms for your 2024 projects and you're waiting on your payment. Many of you who haven't filed yet won't need this information, but it's there for you when you need it. Okay, next slide. All right, let's talk the future. Again, nobody has a crystal ball, but we've got some notion of what we can expect based as reading the tea leaves and a lot of the conversations we're having with folks on the Hill. Next slide, please. So the good news for tax credits. The underlying tax credits, as I mentioned before, a lot of the credits were around for a while being used by the private sector. They're by and large receive fairly bipartisan support. There's already been letters to Congress from both parties saying, please keep these tax credits for the most part. In fact, solar has increased its production capacity in large part because of the things Jeremiah was said. It just makes economic sense. You save a lot of money, especially if you're a school district. One school district we worked with was saving $25 million over the next 10 years because they put in so much solar, and it was paying for their electric school bus, which is then saving them money on gas. Like, it's a really fiscally responsible thing to do. And then a huge significant portion of the credits, as we're seeing come in, are actually going into more Republican areas. A lot of people are benefiting from it across the aisle. So this is really a nonpartisan issue. It's how do you pay for projects you've completed and take advantage of tax credits that the private industry is already taking advantage of. As I mentioned, you can only change this through legislation. There are some regulatory changes that can be that can affect some of the processes and the way they do the credits, but not the underlying credits themselves. Those are written into the law. So again, as I said, any legislative changes would not take effect most likely until January 1st, 2026. And that's only if they are approved within the next few months. We are not looking at drafts at the moment that are changing those tax credits. The one draft I've seen that's gotten rid of the private electric vehicle credit, again, not direct pay commercial vehicles, but private credit, still allowed for it to go through the end of the program, which, as Nestor told you, goes through 2032. So we will keep you posted and, of course, keep people aware of what's happening. But this could be one of the greatest ways to fund these types of projects if you're contemplating them, because they are written into the tax code. Of course, there are those bonus adders that Nestor talked about, one of them being the low-income communities bonus. That has a separate portal that you need to apply to before you finish your project. That particular area, that additional 10 to 20% on top of your base 30% that you can typically get for your projects, that may be in jeopardy because that one has less bipartisan support. However, I want to flag that that's not even available for electric vehicle purchases or for electric vehicle infrastructure. That would just be for your solar and wind projects anyway. Okay, next slide, please. So key takeaways. What do you need to remember if we've bored you to death? Come back, pay attention. Next slide. Okay, they're not subject to these federal funding freezes. They're still part of the tax code. As Nestor said, documentation will be very, very important. And we are here to help you with lists, with fact sheets, with all kinds of things so you can do checklists and make sure you have everything you need for filing. And then just mind your deadlines, right? It's really important to know that late returns are not accepted. So again, if we want, we can go through the Q&A for anybody who's willing to talk through what their deadline might be. In this situation, you cannot amend the type of credit you're getting once you've filed your tax credit. So it's important to file the first time correctly, to the extent that you get assistance with us and others. If you are unsure, reach out. And also you can request a 6-month extension on your filing deadline, just like you can with your private taxes. You just have to file a form by your first deadline. You get yourself an additional 6 months to make sure you're filing correctly. And that's, of course, the best defense. You are entitled to these credits if you file correctly, and we are here to help you do that. So with that, I'm going to bring it back to the resources, as I promised we would give you. Next slide, please. This is probably the most important thing that to come away with, if nothing else, is that this is doable and we have resources here to help. That first link is to a interactive online one-stop shop, completely free clean energy tax navigator tool that you can use to enter in your particular type of project. If it's an electric vehicle purchase, or like your fleet transition, or electric vehicle charging infrastructure, or you're thinking about a solar, wind, or geothermal type project, any one of those can go through our tax navigator. Our navigator will ask you certain questions. You provide accurate answers, and then the navigator will pop up fact sheets and information and guidance and annotated tax forms, and will let you know whether or not your project is likely eligible for things like direct pay. In addition, as Jeremiah said, when you get to the end of that process and you realize that your project is eligible, there'll be connections at that point to additional filing guidance, as well as connecting up to our friends at Giraffe Financial, who were the ones who helped Jeremiah electronically file. They can take your information and put it right into their platform and electronically file for you, as well as the annotated tax forms that I referenced. And then if you're like, wait, I need a lot more resources and I don't want to go through the navigator, although we strongly recommend you do. Even if you're ideating a project, you can go through the navigator. There's our incentive page. It has all of our fact sheets and resources in one place, not just ours, but our incredible other partners that were in the Lighthouse cohort, like World Resources Institute and Government Finance Officers Association, Electrification Coalition, all of those folks. We have their resources up there as well. And their resources are part of our clean energy tax navigator. So this is all here to help you. You can walk through it anytime. And I'm very happy to take the next bit of time to answer whatever questions y'all might have. Thanks so much for your time. I think it's back to you, John.
Wonderful. Well, Jillian and Nestor, thank you so much for that overview and giving us an understanding of the abundant resources that you have on your website and elsewhere. And now I think we'll just head straight into the Q&A. And of course, invite folks to type in more questions there. We also saw one person who raised their hand briefly, and if you'd like to do a verbal question, just let me know. Let's go back through the questions that have already been asked. If a project is receiving federal funding, such as Federal Highways Administration funding for 80% of the project, can the entity use the tax credit on the remaining 20% of the funding if those funds were required as non-federal cost share? And Jillian answered in the text, yes, elective pay can cover non-federal cost share.
May I add a little bit of flavor onto that too, John?
Please.
So this was a really important one that folks were not aware of. They were like, well, it's part of the grant, it's a requirement, but cost sharing can be covered. And the other thing I'll say is when you're determining how much you can get back, like if it's an electric vehicle infrastructure project, you can get up to $100,000 of your project cost for each charging port. That's considered a project. So let's say it was a 2-port project. And so you could get up to $200,000 back. And that's how much you would be able to access up to that 20%. So if your project cost, in that case, if your project cost, let's make it easy, $100 million, you could get that 20% back, which would be your $200,000 back, all of it. If, for example, it was a little bit more than that, or a little bit less, a little bit more than that, and your 20% would have been more than 200,000, you wouldn't be able to get all that back because there's a cap at 200,000 at 100,000 per port.
So we actually did this for one of our battery storage projects. We received a Formula EECBG grant for 80,000, but the total project was 150,000, and we covered the remaining 70 and filed for the 30% of that 70,000 that we spent. So real life example, we just filed that like I think yesterday, maybe today.
So the next question that came in, is there a link for the map to determine the urban or rural areas, the areas of eligibility? And Jillian did provide a link, direct response. You can find that in the Q&A. And I believe that you also offered that link in the webinar chat. Is that right, Jillian? That's
right. I wasn't sure if I was doing it correctly, John. So I added the questions, and I also added it in the webinar chat to make sure people have access to it. And I think I take it as a very good sign that Department of Energy is still hosting these maps, and their acknowledgement that these tax credits are real, they still exist, they are written into law. This is what we have to provide.
Yes. And that is an ArcGIS website where you can actually, it's an active map and you can change the parameters and move things around.
Right, and you plug in your address and it'll show you right where your address is, and you'll see if you're in an eligible census tract. And I'll do another plug for the navigator to say it's in there. If you go through with your EV charging project, it will say, are you located in a non-urban or low-income area? Check the map. So these are not things you have to remember yourself.
The third question that was typed in advance was, for Buy America requirements for the federal tax credits, would following the rules for a relevant agency meet the requirement? For example, for a US DOT project, if you meet their requirements, does that meet the requirement? Presumably for the tax credit. And this person offered an actual link to the specific Buy America provisions they were referencing. And Jillian responded, Buy America for DOT is similar, but slightly different than the domestic content requirements for elective pay. But good news, domestic content requirements do not apply to EV vehicles or EV charging projects.
And that was me making an assumption that since it is a US DOT project, it would be electric vehicle charging related. If it was solar or wind or geothermal, then you would have to look at your domestic content potentially to see if it applies.
Yes. And in a slightly related vein, not to complicate things too much, but for the grant funds that we administer, there's also a project cap. It's a de minimis waiver for any projects under $500,000. Let's see. I also just want to make sure we're calling everyone's attention to the chat where Jillian has very helpfully offered some hyperlinks to these references. Again, the mapping tool is accessible there. As well, the annotated tax forms, a page with general filing guidance, and another person asked the question, how far back can you go to file for the credit? And Nestor, was that link in response to that question, or would you like to handle that now?
No, that link was just basically where all those resources that Jillian dropped in the chat are gathered, and entities that are interested in reviewing how they're applicable to their own project can put in basic project details and would get a specific resource for their degree review. But in terms of that question, so the tax credit really, you have to claim it for the tax year that is applicable there. So I think that is immediately after that tax year is up, you have specific deadlines that you need to comply with, and that's why the assessment of determining the tax year comes in handy. And so it depends on when the project was built or put into service rather, and when the tax year deadline comes up for that entity. If you give us more details, we could potentially go about like the rough edges of what that could mean for your project and your entity.
So that's a good pivot. How should entities reach out to you for assistance?
I would say the best way to reach out to us is through the Clean Energy Tax Navigator, because it drives you through that process to get, hopefully your questions are just answered that way and you don't have to wait for us. But if you need additional pro bono assistance on the back end, you can enter in additional legal questions that you have, and we respond to those in the order they're received based on kind of impact and whether or not the project is pro bono eligible. And then you'll hear from our in-house staff attorneys to help answer your questions. So that's probably the best way to get it. But I mean, I don't know, to Nestor's point, John, if the person who asked the question would be willing to give us a little bit more information, we might even be able to answer their question here as to whether or not they can claim a credit for the project they have in mind. It really, the first question, there are two big questions. When was that project completed or placed in service? And what is their tax year? Is it January to December? Is it their fiscal year? Maybe is July to June? You know, different cities and public entities have different fiscal years, which is typically what you would use to choose your tax year.
Very good.
So I don't know if they want to, if they feel comfortable providing details in the chat, we can walk through what a schedule might look like for them to check.
Another question that was typed in regarding the future of these tax credits. I understand what you mean about the law having to be rescinded by Congress in order to not receive these credits, for the credits to go away. But what if no one works in the jobs at the IRS that processes these claims?
It's a fantastic question, and one that we asked immediately on January 20th. The good news is, well, the bad news is, the reality is when you don't have people, it takes longer. The good news is you can get paid your interest for any additional time it takes over that 45 days, because they are owed that to you regardless of how many people they have working for the IRS. So for that reason, they're typically not pulling off staff that are covering those refund processing, because that costs the government money. That said, there are some reductions. There's not available technical assistance the same way there used to be. There's no one manning the low-income communities bonus to answer questions the way they used to. So that piece of it is definitely gone. And a lot of the IRS employees that were put on administrative leave are actually being brought back for tax season. So I hear that loud and clear, and I think it's a very valid complaint and concern. But I also think there are guardrails in place for this particular type of reimbursement that people can feel more comfortable about.
Okay. And here's a very technical question. Would solar pathway lighting qualify?
I would say yes, a solar asset, if it meets the definition of an eligible credit property, and the solar panel itself likely would, but you would need to figure out the project cost of just the eligible credit, which might just be a tiny solar panel. So it depends, like, whether or not something like that is worth it. If it's the whole thing together collectively would not be the cost of the project. It would be the cost of the eligible credit property. And here that would be the solar panel itself. And I just don't know how large that would be in a solar pathway project. We did have that question about what was it necessary? It was a crosswalk.
Right, traffic lights that are solar powered, and of course, right back to what Jillian said, essentially, can you segregate the costs only to the energy generating part of it? And if you can, that could still be a potentially aggressive tax position to take, but potentially eligible in those cases sometimes.
And a follow-on question to the how far back can you go to file for the credit? If an entity purchased electric vehicles in 2023 and 2024, could they seek credit for any of those vehicles?
Great. Thank you so much for providing that additional detail. So for all 2023 projects, we've kind of exhausted all of the extensions and 6-month extensions, and for all of the last tax years, if the entity has a tax year of January to December 2023. Okay. However, this is where the next question comes in, and I don't know if you know this, but what is the fiscal year of the entity that is seeking to potentially claim these credits? Because it could be, if they purchase the electric vehicles in late 2023, they might be part of a different tax year. Okay, January to December. Well, that makes things a little bit cleaner to answer your question, but what it does mean is that your 2023 projects, if they were completed, like fully placed in service and operational in 2023, those would not be eligible. But that your 2024 projects placed in service in 2024, operational in 2024, would be eligible. And your first filing deadline for a January to December tax year would be May 15th, 4.5 months after the start of the new tax year. So April 15th is your first filing deadline for those electric vehicles that were placed in service in 2024, based on these facts. And you would have the option of requesting a 6-month extension by filing a form that you can find on our website by asking this question. Or you can go ahead right now and just start your pre-registration process for your 2024 vehicle, all of them at once, put them all on your tax forms together using our annotated tax forms once you get your unique ID number, and file on April 15th and get some money back if they're eligible. But again, look at our fact sheets and make sure that the vehicles you're talking about are eligible. We have a pretty good fact sheet that will tell you exactly what types of manufacturers and what the requirements are for eligible vehicles.
And a related question, 4.5 months after the tax year ends or 5.5 months? I've heard both, says this
Yeah,
question.
they try and make it confusing, don't they? It's April 15th, which is 4.5 months. So it sounds like it's 5, but it's actually 4.5 months.
So one thing
Oh, sorry, May 15th.
one thing that was
Now I'm making it more
interesting.
confusing. It's
Should
4
I-
months to get to the end of April, plus 15 days to get you to May 15th.
One thing I thought was interesting, Jillian, that I learned in this process is, having never filed, we didn't have a tax year. We just had our fiscal year. We got to choose our tax year. And so we did not choose to align our filings with our fiscal year. I file on a calendar year, even though my fiscal year is technically July 1 to June 30, because at the time that I did it, I would have missed out on 6 months of the beginning of 2023. And so I've just decided to keep filing on a calendar year, but you can then go back and change your tax year. So we'll do that eventually. But nobody else but me is doing anything with this. So I'm like, well, I'll just keep it on the calendar year. Cause I got to file in November and I'm gonna file again in March. And I'm like getting all this money all at like the same time. So that's why I chose to do it that way.
Yeah, I mean, you can do that if that's your first filing. They allowed
Right.
all these, since Jeremiah was part of the leading bleeding edge, he gets certain concessions and being able to paper file and also to be able to choose the tax year. And I think if it's your first time filing, you can't choose. But the one thing, Jeremiah, that might end up being useful to you is realigning your tax year with your fiscal year,
Oh, yeah.
only because you have to keep two separate sets of reports
Right.
and accounting that your finance people might not love.
For us, it really ended up being a function of like, that's just changing dates in a query that we run. It's not
Great.
really challenging.
Okay.
But we had the discussion, which is
Right.
what's important, right? As you mentioned earlier, talk to your finance folks, make sure
Yes.
they're okay with it, talk to your attorney, like just have the conversation and get on the same page. That was a big deal for us.
Right. And so the person who brought up the electric vehicles might be great to talk to your finance person, make sure that they know of this opportunity. You can use the tax navigator to show them that these things are eligible, and bring your lawyer into the conversation, start getting them comfortable with it. We know that attorneys are largely risk averse, especially at cities. I've worked with many of them. And so we understand that it takes a minute. So the more you can kind of warm them up to these ideas now and then get them on your side in bringing money back to your county or your district, the better.
Okay. An additional question. If we already have a designation number from the IRS for filing for fuel-related tax credit reimbursements, as in CNG, compressed natural gas, is this registration number you mentioned a different type of number?
Yes. There are a couple things that this person might be referencing. First, there's your EIN. That's your tax identification number. That's the number that your entity has, basically how the IRS knows who you are. We all, as as individuals, have social security numbers that identify us. Entities have EINs. And so somewhere you have an EIN number that you probably use to file for that tax credit. In this instance, in addition to that, what you need is a pre-registration unique ID number for each one of your eligible properties. So what I mean by that is if you have 10 cars, each one of those cars needs its own unique ID number. It's kind of a elegant way that, believe it or not, that the IRS used to avoid fraud, but to have people file the documentation early to say, yep, this is an eligible vehicle. Here's a unique ID number for that vehicle. Oh, this one's not. That one's not going to get a unique ID number. And you can do that. You have to do the same thing with your solar projects. You have to do the same thing with your EV infrastructure projects. So you get a unique ID number. How many unique ID numbers did you end up filing on your tax forms, Jeremiah? Do you remember?
Oh my gosh. Probably almost 30. Yeah. And depending on when you submit them and it's a bit of a luck of the draw, like how long those take to come back. Because I filed for 4 separate entities, right? And so I had some that like within a month I had my numbers. And then I had some where like it took like 12 weeks like before I got those numbers. And again, it's just kind of a luck of the draw. They're busy folks over there. They don't have a lot of staff, and so they're working their way through those projects. We also had a couple that they sent back to us and said we need more information. You know, like missed a document somewhere. So be sure you have all your documentation before you.
Yeah, I think that's exactly right. And we have a whole list of documentation that you're going to need.
Yeah.
Through working with folks like Jeremiah, we built up the list of what people needed to make your lives easier. So he's kind of paved the way for you all. And you can have that kind of ready when you use your pre-registration. But to Jeremiah's really important point, they recommend you do your pre-registration filing as soon as you can. They want you to do it 120 days before you actually have to file, if you can. So if you are thinking about filing on April 15th, or sorry, I keep saying that, sorry, May 15th, we personal folks have to do it on April, but May 15th, it would be good to start now to try and get your unique ID numbers for that filing. And again, you can always ask for 6 months more to do your official filing if it just is taking longer to get those unique ID numbers.
Yeah, I was on the safe side. We went ahead and asked for the extension, not knowing whether or not we'd need it. We just went ahead and asked for it, and had it just in case.
Yeah.
And we ended up not needing it,
Yeah,
but who cares? I had it and that was what mattered. Just,
Yeah.
just hedging your bets, really.
And a good stress reliever.
Yeah,
right.
absolutely.
And it's something that it's also automatically granted when you request it. So, I mean, it's general practice in the private sector. So it's also available here for entities to take into their back pocket to make sure you have enough time.
Good.
Yeah, so on the websites that you'll see of all our resources, we have a link to Form 8868. That's what it's called, to just ask for an extension. You just have to file it by your first filing deadline, and it's automatically granted.
So we're still eager to receive questions in the chat or the Q&A, friends. I don't see any pending at the moment, so I'd like to offer a couple. Again, this is more to the direction of how to encourage folks to look at the glass half full rather than half empty. And understanding that no one has a crystal ball, which you've said repeatedly, and understanding that there is the possibility of legislative action to undo these provisions of federal tax law. Nestor, you said very early on that otherwise the law has a 10-year lifespan. Is that right? So since the IRA was signed into law in 2022, and it has a 10-year lifespan, does that mean that this program could continue until 2032 without legislative action to undo it?
That's my reading. Yep, exactly. That's the length that it's scheduled for, unless any other law of the land. That's the law of the land for now.
And I'll just even add, that is the earliest, John. So it doesn't even automatically expire in 2032. It was written in such a way that in 2032, it could expire if certain greenhouse gas reduction emissions targets were met. And the way things are going, I think it's highly likely those emissions targets will not be met, in which case the program, if left unchanged, would continue.
That's very helpful. And then also, Jillian, in that direction, I think I was deducing from what you said that assuming legislative action in the next few months, or you tell me how long, January 1, 2026 is the soonest possible death date.
I mean, again, if everyone got their act together and decided to flout all history of the way the tax code has been changed from time in memoriam and implemented a complete shift to repeal these tax credits with one fell swoop in the next 2 months and said those changes are now immediate, then yes, I suppose only those projects that had been completed in the first part of 2025 until that change had happened would then be protected. But even in that instance, they typically would, which again, I would never anticipate being possible. But even in that instance, they would most likely have a safe harbor provision that any projects that started construction within that period relying on that would be covered by those tax credits. But again, so yeah, I feel very comfortable saying January 1st, 2026 as the most likely worst case scenario if the worst case scenario were to take place.
Got it. Thank you. I appreciate you indulging that.
Yeah, to be clear also, John, I mean, these tax credits have been there in large part also since before the IRA. So it's not a creature of the IRA, and industry has relied on them on a bipartisan basis for a long time, decades.
Yeah. In the direction of wrapping up again, since we don't see any more questions typed in already, I'd like to direct this question to you, Jeremiah. In a nutshell, like elevator spiel, what advice can you offer from your firsthand experience to other local governments to avoid pitfalls or delays?
Oh, well, that's actually fairly easy. Because Jillian and her group have laid this out for us, right? There's a runway. Um, the clear, easy thing to say is have all your documentation, right? Have everything that you know you're gonna need, and they have a list. It's really like a punch list of like, these are the things we need, right? Need my permission to operate letters for my solar, right? I need when my construction started. I need my backup documentation on what I paid and when I paid it, right? All of these things are the things that frankly, we have anyway, right? Like, none of it was documentation that wasn't somewhere to be found for me. It was just cobbling all together in one place and having it all there ready to roll, right? Annotated tax documents, again, already there to be filled out in a certain way, right? It's follow the pathway that the Lighthouse cohort and that the Lawrenceburg governor and these folks have put in place for us. Just step by step. And you're gonna get there and it's not gonna be that hard. I would also say that honestly, you may get pitches from maybe less than scrupulous like financial services firms, because we got a pitch here and there like, oh, we'll do this for you. We'll make it super easy. All we need is, way too much money. And to that, I would say it's actually not that hard. You know, it was, again, I think intimidating a little bit for a local government person who had no previous experience with taxes of any kind except my personal tax return, right? But once it was all said and done, like the picture became very clear. And I've given this advice to a number of my colleagues in local government around North Carolina that have said, hey, I got somebody that has offered to do this for $30,000 or $40,000. And I'm like, oh, no, don't do that. Like, I can help you in an hour. Like we can walk through this and get this done. It's not as cumbersome or as difficult, I think, as people think. That said, if you're got a ton of projects and it's very complicated and you got this and that, I'm not saying don't ask for some sort of help. Giraffe Financial was a great help to us. They were a great help to us. They helped us electronically file rather than put it in an envelope and send it to the IRS with our fingers crossed. But it's not as daunting as it seems. And we've got great, really smart people that you've met today that have laid a groundwork to make this easy for us. So,
Wonderful.
don't make it harder than it has to be.
Okay. One final typed question. Can you recommend software that can be used for an elective pay return?
I'm just gonna say my experience, I wasn't able to find any. I know, so if you go to the IRS's website, they have a list of like all of these companies that can do electronic filing. And it's anything from your TurboTaxes to all the way down the list. I called every single one of them and was not able to get anybody that could do it. That may have changed because people update software, and so that's very possible. But and again, I don't know that I'm supposed to be like plugging Giraffe Financial, but like they were the only ones that had it ready to roll. I was able to give them all my documentation, and they were, we went back and forth a little bit and made sure I had all my ducks in a row, and they submitted it via e-file for me on my behalf. I could not find any other software. Jillian, I don't know if there's an update.
I mean, I put in a financial guidance document that we did. It's note the date on it. It's current as of October for that first filing, November 15th. And it was at that time, no one, literally no one had the software. They said they did. They thought they had the right software. Even the IRS said it would work. And then it was missing like an EV infrastructure electronic form, or it was missing the ITC form. It had like had all these, the Drake software kind of rose to the top as having the right stuff, but you needed someone to create, without getting too technical, a whole thing on the background. So we trusted Giraffe Financial and we called them up, and I said to their leader, I was like, do you want to be Batman right now? And he said, yes. And so they went and they bought all of the software they needed to make sure they had the system that would actually work. And they spent hours on the phone with the IRS system. So I feel very confident recommending them. And the other ones, folks, I'm sure have gotten up to speed and I'm sure have updated their forms. I just can't tell you who. But I'm sure that there are some that have at this point.
Very good. Thank you. Well, Nestor and Jillian, any final last words?
Don't leave money on the table.
Yeah. What
Yeah.
Nestor said, don't leave money on the table. It's a fiscally irresponsible thing, and we're here to help. Thank you
Thank
for the
you.
time.
Thank you so much, friends, for this. I want to move now into the final stage of our webinar today. That is the offerings from the North Carolina Clean Energy Technology Center. While it's very late, I would be remiss to not mention that our CFAT grant is still on the streets and the RFP is available. The deadline has been extended to April 14th. It would be quite challenging, I think, to pull together an application at this stage, but we welcome applications up until April 14th. And everything you need is on that page linked in this PowerPoint. And by the way, we'll be distributing the PowerPoints to attendees. Number two, the Charging Smart program. We have a lot of local governments on the webinar today. I want to make sure that everyone is aware that we are offering free technical assistance in the Southeast region to authorities having jurisdiction, local governments, code enforcement offices, planning offices, to reduce barriers to EV charger deployment. This free technical assistance is available now for the next two and a half years. And a cohort is being formed right now under the name Charging Smart. And this link in the PowerPoint will also get you to more information there. The webinars, we have several webinars coming up. Let me go into those. And we also have some in-person events. On April 10th, our next webinar in collaboration with NAFA is Best Practices from Green Garage Winners. On May 15th, we are offering a webinar on optimizing at-home EV charging. This is not so much for a public audience as for local governments and perhaps some private entities might benefit from this information. In-person events. On April 15th, we are having an alt fuel vehicle display and ride and drive on the Centennial campus in Raleigh, North Carolina. That's open to the public. On April 26th, we will be in two locations at the Piedmont Earth Day Fair in Winston-Salem and the EV display Pig Pickin' Saturday at East Carolina University in Greenville. Both of those events are also public. On May 20th and 21st, we're promoting events open only to fleet folks, predominantly local government, state agency, et cetera. We will also have some electric utilities invited to those events. On May 20th, it is the EV display at the MEC Deck Day. That's the Declaration of Independence Commemoration Day in Mecklenburg County. In Charlotte, and again, that's for a fleet audience only. Registration is required, but it's free. On May 21st, we will be at a dragway in Julian, North Carolina, just outside of Greensboro. And that's the alt fuel demonstration demo day, we call those. Additionally, we hope everyone is saving the date for our conference, August 25th through 27th at the Benton Convention Center in Winston-Salem, North Carolina. And there's our splash page, contact information. Please don't hesitate to reach out with questions, and we will be sending these slides out to all registered attendees. Jeremiah, Nestor, Jillian, thank you so much. April, thank you for your assistance. It's been a lovely webinar. We really appreciate your sharing your knowledge so generously.
Thank you, John. Great presentation, a lot of information. So if folks do have questions, you can reach out either to John, his organization, or you can send it to info@nafa.org. We will make sure we get it to them. And like he mentioned, you will have access to the recording as well as the slides in the coming days. So be looking for that. At the conclusion of this webinar, you will have a pop-up of a very brief survey we appreciate you taking to help us see what you would like to see in the future and what is on your mind, and if these webinars are helpful to what you're doing right now. And with that, I'd like to thank everybody for your attendance and for these great presentations today. And I hope you have a good rest of your evening.
Thanks so much, friends. Bye-bye.